Hello, Scott Bear here, Mortgage Pro. I am part of your real estate success team here at Realty Pro, and I am here to make you successful. All right, I wanted to give you kind of a broad overview over the past 8 months as to what's been occurring in the market, give you a few tools that you can speak to your clients about, set yourself up as the expert, some general things that you can say, build some trust and rapport, and close more deals. All right now there's a lot of negative sentiment in the bond market. There's been a lot of selling. Frankly, it's oversold. Now, this is happening not only from individual investors such as ourselves, reallocating our mutual fund, bond portfolios over to stocks, but big hedge fund managers are also reallocating large portions of their mutual fund portfolios, and they're reallocating them over to stocks because of what the Fed is doing. Obviously, they're trying to create inflation, and the stocks are going to position themselves a little bit better and receive a little bit better return. So there's been a lot of selling in that bond market that's occurring right now. And there's an old market saying, you buy on the rumor and you sell on the news. Well, that's basically what's been happening over the past 8 months. Come the beginning of that period, lots of heavy buying, and they were buying on the rumor of QE2 coming out, not knowing what's going on, and the risk of deflation. Deflation is obviously an ally of bonds, and the economy wasn't doing so well, and so lots of buying was happening. Over that period of time, it took about 6 months, and the mortgage-backed securities pricing raised about 700 basis points. It took 6 months to do that. And then boom, QE2 happened. November 3rd, November 4th, the Fed announced their policies and what they're going to be doing as far as buying the treasuries, and everybody sold on the news. Lots of selling, like I just mentioned, heavy bond selling, boom, boom, boom. It's been going on. Of course, the home loan rates have gone up as a result. Now, understand this. It took 6 months for the mortgage-backed securities market to rise 700 basis points, and in a matter of 6 weeks, we lost it all. Lots of volatility going on in the market. There's a saying in the mortgage market that rates, they go down slow and methodical, and they go up fast and furious. And that's exactly what's been happening over the past November 4th. 6 weeks they've gone up fast and furious. That kind of leads us to a question: are rates going to go back down, or are they going to stay about the same, or go up? What's going to be happening in this near future? These are some of the things that you can communicate to your clients. Well, let me paint a picture for you. Well, let's use history as a tool, see if we can make some conclusions based on history to make some new conclusions based upon what's happening right now. Let's look at summer of May of '09, towards the end of May, early June. We had a huge drop in the mortgage-backed securities pricing. We had 650 basis points that were lost in a matter of just several weeks. And then out of nowhere, we had a huge rally, 460 basis point rally. It took about a month for that to occur. And then all of a sudden, out of nowhere, in a matter of a few days, we lost 230 basis points. It's just all this huge volatility. Now, what was occurring during that time? As I understand that during that time, the Fed had already guaranteed that they were going to be buying $100 billion in mortgage-backed securities pretty much per month. Now, couple that with the somewhat slow or the low supply of mortgage-backed securities, and it kind of helped fuel part of that rally that I just mentioned. Now, is that what's going on right now currently? No, it's not. The situation is completely different. The Fed is not buying mortgage-backed securities right now. They're trying to create inflation, more inflation. They're buying treasury securities. Right now, the mortgage-backed securities supply is a little bit more plentiful, and it will get even more so because the refis that have been happening because of all the lower interest rates, those haven't even saturated the mortgage-backed securities market as of yet. Those refis that were happening come, towards the end of or towards mid October. They won't come in and saturate the mortgage-backed securities market till sometime in January, from what I understand. Well, not only that, but the Fed is continually trying to create inflation, and so it's becoming an enemy of the market, and the bond market is suffering as a result. So will the rates go down? No, I don't think so. What will probably happen is we'll see maybe short-term market-based improvements that will be just that, short-lived. They'll be inconsistent, and so gambling on rates right now is not a good idea. Everything is poised against the bond market taking another rise because of something that might occur in the market. A little bit of extra news to go into the weekend. The Bush tax cuts have been extended. The Senate passed them. The House passed them, I believe, yesterday. And today, the president signed them. So you can go into the weekend knowing that come 2010, when you pay your taxes, you're going to pay a little less taxes. Woohoo! All right. Have a great weekend. Make it successful. And we'll see you next week. All right. Bye-bye.